Arash, I both invest and speculate, and sometimes I make fun of speculators because sometimes the arithmetic favors investment. But the truth is, Arash, all of the money that I invest sensibly, I made speculating, and I made most of it in private placements. So I'm very attracted to the sector, and I'm going to be fairly broad-ranging in my interest, which is to say, I'm going to be happy to do straight equity private placements with warrants, of course, giving me access to the upside. I'm also going to be willing to do so-called non-dilutive private placements, which is to say, I'll do private placements that are debt instruments with warrant kickers, where an issuer can obtain money from me or from my cohorts, including Sprott, with a coupon attached to it and some equity-like upside that dilutes them less but takes away our downside. We will happily do straight debt. We'll happily do convertible debentures, all those types of things. You need to be broader ranging now beyond just the old straight equity private placement, because the market is so much larger, so much more diverse. The needs of the issuers are so different. And frankly, the needs of your audience is different. I myself, in my late 60s with a lot of surplus cash, like the idea of a monthly or quarterly coupon. So, Arash, you're going to find me doing a bunch of structures. Getting back to your question, in a market that is as rare as the market that we're in now, which is to say a market where we believe over 2 years or 3 years or 4 years or 5 years, commodity prices aren't going to be merely higher, but much higher. But in a near-term environment where the equities have crossed the 200-day moving averages to the downside, and the principal motivation is sell, which is to say tax loss selling, you really need to focus on the types of companies that you want in your portfolio that you're comfortable with, make a shopping list, and set a price. I think you can afford to be very, very, very picky now. So I want to pick companies that are either run by tier 1 promoters or top tier 2 promoters who are young enough that they aren't yet tier 1, but have already had 2 or 3 successes behind their belt. I want really good people. I want projects that I'm relatively certain will at least reach feasibility study this phase. I kind of want it all, Arash. I think that there are 2,000 issuers out there that are getting punished simultaneously. And so I think you try to identify from your own purposes the best 200 of those 2,000, the best 10%, and you make yourself a shopping list, and then you get ready to go to war. The precious metal sector, which I'm attracted to, is falling fast, and I'm attracted to it. Even the uranium sector, which 6 weeks ago was white hot, is experiencing fairly precipitous price declines. There are non-precious metals, natural resource companies, which were very, very, very ascendant 6 months ago. Battery metals, lithium, copper, all those things. The whole complex is compressing, which is great. There were a lot of companies 6 months ago that I was attracted to as a consequence of their news releases, but I couldn't pay the prices that were being charged. That is rapidly taking care of itself. In particular, Arash, human nature being what it was, or what it is, pardon me, companies were loath to issue new equity when their prices were going up quickly because they wanted to wait a little longer and see if they could raise the same amount of money with less dilution. Now, there are some management teams, your brother comes to mind, who raised a lot of money in the good days and don't need to raise money now. But there are a lot of other people who weren't so smart. They played chicken with the market and they lost it. They need to advance their projects. They have good projects. They didn't want to raise money at $3 because they thought they could raise it at $3.50. And now they're going to have to raise it at $1.75. Too bad for them, too good for me.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.